Bluestone is a exploration company that is advancing the permitted and high-grade Cerro Blanco project in southeastern Guatemala, as well as the Mita geothermal renewable energy project in Guatemala as well. And today we have presenting on behalf of Bluestone, the president of the company, Darren Klink. Darren is the former EVP and head of corporate development of Oceana Gold, and we're very happy to have Darren, as well as the VP of Investor Relations, Stephen Williams. One other just quick housekeeping note. For Q&A during the presentation, there is a type-in feature that you can utilize to ask Darren and or Stephen questions throughout the presentation. We also have direct audio for Q&A as well. We encourage folks to utilize that feature if they choose that option at the conclusion of the presentation. So during the presentation, the type-in feature is most recommended. So without further ado, the great and one and only Darren Klink.
Great, thanks, Matt. Well, good afternoon, everyone. It's great to have an audience on today to hear a little bit about Bluestone Resources. Obviously, we're doing this in a virtual scenario, which has become the norm. But over the next sort of 20 or 30 minutes, we'll give you a bit of an overview on what is one of the highest grade undeveloped gold projects out there today, and some of the best backers in the industry with really decades of success. And on top of that, we're now moving into a phase where we're going to bring this to fruition at a time which really, unbeknownst to us, of course, you know, the gold price is moving up, and the margins on this asset, I think, arguably are as good as any business that you'd see out there today. So Stephen, if you want to move on to the next slide, we'll jump right into it. This is the forward-looking statements that indicated, you know, that we'll be making some forward-looking statements and outlining the risk factors within the business. And then the next slide here as well. So maybe just as a high-level overview for those that aren't familiar with the company, Bluestone is a relatively new company. We kind of put the company together 3 years ago when an opportunity presented itself to acquire an asset in the southeastern part of Guatemala that had been previously owned by Goldcorp, one of the world's largest gold miners. And this was an asset that Goldcorp invested a couple $100 million in over a period of 10 to 15 years. Goldcorp and the predecessors, because Goldcorp, in fact, acquired a company in 2007, that had this asset. They had actually acquired it from the original discoverer. And over that sort of 15-year period plus, had done drilling, engineering studies, feasibility studies, started actually underground development. And then what ended up happening is that for a couple of reasons, one, strategic in terms of the focus of the company, and number two, also that their operating gold mine in Guatemala, which had been highly successful, was going into more of a closure phase because they had mined out the ore. The decision by the management team at that time at Goldcorp was that, look, this isn't going to really fit for us. It's not quite large enough for us to kind of have a footprint in Guatemala with our flagship asset moving into a closure phase. So we're going to look to divest this, and we're going to focus in other areas where we can make bigger investments and focus on bigger assets, really an opportunity cost situation. And so this was in 2016, 2017, and very different time in the marketplace. Nobody wanted to talk about gold, of course, then. You know, for the most part, 2017, and as you head into 2018. But presented a great opportunity for Bluestone, which was effectively a shell company. It had one unpaid employee or a chairman and $35 in the bank. But we were successful on going through a process, becoming the anointed bidder. At that point then, the company went out to raise the capital to try and acquire it, and the acquisition cost was $18 million US. Along with a small equity stake, so just under 5%, 4.9% equity stake, and a 1% NSR to Goldcorp. And so Mighty Mouse Bluestone, with $35 in the bank, was actually successful in raising about just over 60 million US And that's when one of the more well-known resource, metals and mining, oil and gas families globally stepped in and were the largest holders, the Lundin family. And Jack Lundin, who's not on the call today, our CEO, joined us in January to kind of follow on that investment and that support. The Cerro Blanco project, which we're going to talk about, is effectively 1.5 million ounces at 10 grams per ton. It's one of the highest grade undeveloped gold projects in the world today. We've been successful in adding to those ounces here over the last 12 months. And then as you can see, the cost structure on this is quite remarkable. The gold price today is through $1,900 an ounce. And what you see there in terms of our all-in sustaining costs, so the cost really on an all-in basis to produce an ounce of gold, based on the feasibility study, which we put out early last year, is estimated at less than $600 an ounce. So that is a margin effectively today of $1,300 an ounce on a $600 an ounce operating cost. There's not too many businesses out there that have that sort of margin. And we're right now in the midst of putting the project financing package in place, into the engineering phase right now as well, and should be into construction early next year. Next slide, Stephen. So that's a look at the capital structure. So you can see here, good cash in the bank. We did an equity financing here 2 or 3 months ago. And so this is really the bulk of the equity that's required for the construction process. And so we're right in the midst of engineering now. We're finalizing the flow sheet. We're in the process here over the next couple of months to start to place fabrication orders for the process plant. And these will be pieces and componentry that will be fabricated in the United States, Europe, all over the world for that matter. I talked about the Lundin family, so they remain to be our largest shareholder at 26%, and also strong support from CD Capital, which is a London-based resource fund, with 12%. And then as you move through, Goldcorp has been acquired by Newmont, of course, a well-known US-based gold company, with 2%, and then insiders and institutional investors spread around the world. The enterprise value of the company today in US dollar terms is really around $150, $160 million. You'll find here in a slide shortly that in fact our first year of annual production, if you took the spot gold price today, and fast forwarded, effectively less than 24 months when we expect to be in production, at the spot gold price, we'll generate that much free cash flow in the first year of annual production. So it's a reason where the management team, our investors, the engineering team, we're 130% focused on continuing to advance this as we have over the last 24 to 30 months. The next 24 months are very exciting and are really the opportunity for the re-rating as the company moves from developer through to a cash flowing really entity with some of the best margins out there. So if we look at just kind of a quick snapshot on that 3-year history, as I said, we acquired the asset in the middle part of 2017 and immediately focused on the geology. This was an asset that had been on care and maintenance for about 4.5 years. Some of you may recall the gold price dropped quite significantly in 2013. And so that was really a pause for many of the producers in the industry to pause, look at balance sheets, look at how they could kind of draw back on their CapEx budgets. And because this was a relatively smaller project and Goldcorp, as I said, was trying to extend the mine life in Marlin, their operating asset in Guatemala, the focus went to that. See if we can extend the mine life in Marlin. If we can, we'll circle back and continue to advance Cerro Blanco, this asset. But they were successful in adding a couple of years, but really that was it. And then fast forward a couple of years after that, new management comes in and says, okay, we're not going to continue to invest in it. And so when we arrived in 2017, there hadn't been a geologist on site in 4.5 years. So that was a real important part for us. We were able to get in, we did some follow-up study work, quite a bit of drilling, tightened up on the geology, delivered a feasibility study, I think arguably one of the better ones in the gold space here over the last 24 months, and those economics I talked about. And then have been successful really in this, it's almost like a treasure box effectively, this deposit, on finding more ounces, upgrading those ounces, and we updated the resource late last year. Jack joined us in January to join myself, Stephen, and the rest of the management team, really on behalf of the Lundin family, and to move this now then into a construction and operations phase. Jack had spent the last 3.5 years in Ecuador developing Lundin Gold's Fruta del Norte project, which is one of the more recent sort of transition from development through construction through to operations in really globally as far as gold companies go, and that's been hugely successful as well. You've seen that share price move from sub $4 to closer to 13 through that sort of 24 to 30 month phase, and this is just kind of where we're getting to now in terms of the start of that that sort of phase, and moving into the engineering and be mobilizing to site here quite shortly. Average target price amongst the analysts is $3.50 Canadian. You can see the stock's just over $2 today, and that's a 12-month target across the 6 analysts that cover us. Next slide, Stephen. Thanks. So maybe a little bit about the assets. So we're about 3 hours, 2.5, 3 hours down the Pan American Highway from Guatemala City. For those of you that aren't aware, Guatemala, population of around 16, 17 million, largest economy in Central America, very close ties to the United States, as far as trades and also from a geopolitical perspective. The nearest town, which is about, kind of 7 to 8 kilometers away from the mine site, that's where we stay when we're down there. The land in terms of necessary for the project was all acquired previously by Goldcorp. The infrastructure you see there was really put in place by Goldcorp previously. So we walked into a situation where, effectively in our industry, it typically is somewhere between 12 and 18 years from initial discovery through to production. And the best way to think about it is we've kind of come in with like a 13 or 14 year head start. Effectively the discovery, the exploration, the study work, etc. So much of that had been completed. Some of the underground development, some of the infrastructure. We've come in, done a bit more exploration work, put the feasibility study in place, start to engage with the financing institutions. We're putting the finance in place now, getting the engineering going, and we'll start construction here in the next few months. And luckily for us, of course, at a time when the gold price effectively is up 50% from when we put out the feasibility study only 18 or 19 months ago. So this is a short video that gives you a snapshot on Guatemala. Guatemala City you fly into is a very cosmopolitan city, and as I said, about 6 or 7 million people. Close ties with the U.S., as I mentioned. In fact, Wilbur Ross from the U.S. administration was down in January attending the inauguration of the new president, President Giammattei, and actually pledging $1 billion of commitment to really underpin the economy here, invest in creating opportunities. And of course, this is one of those, and we've got good ties with the U.S. Embassy in Guatemala as well. That's the road, the Pan American Highway. It doesn't look like really a highway we might be used to in the United States, but from a country such as Guatemala and other developing jurisdictions I've been to, it's a darn good road. And so that really links the project and Guatemala City. And then that's a look at the snapshot of the area. Not super rugged. A lot of Guatemala is very rugged. Of course, you've probably heard of volcanoes, earthquakes. It's really on that ring of fire that starts over in New Zealand and goes all the way up north and then down east through California and down through Central America and into Chile and Peru. So that's kind of where it's located. And here you see some of the infrastructure in the underground, and you can see there's a quartz vein. So this effectively the gold's located in quartz. You can see it when you're in the underground, and we've got a great head start as far as the infrastructure in the underground. That's some of our team doing some of the underground drilling and development work, as you can see here over the last 3 or 4 years. That's the infrastructure. You can see water treatment plant, a really good establishment in terms of initial kind of kickoff for us as we get into early works, and a workforce there of around 100 people, primarily all from the local community. Goldcorp did a great job as far as socializing this project for some years prior to our arrival, and that's really is a core part of our business today. Whether you're in Canada or the United States, Australia, Guatemala, Chile, is really those local partnerships with our local communities. There's a strong emphasis on local employment, We're developing a training program that effectively we'll see once we get into operations. The large majority of the 500 or so workers will be Guatemalan. We're fortunate that, in fact, based on the development that had been done previously, there's actually quite a few good skills already in that area. So a great place to be and operate down in that part of the Guatemala. That said, I mean, it really depends in terms of when you're in countries, in terms of where you're at. It's the same here in Canada, in terms of the challenges that you take on. But definitely in the southeastern part down where we're at is largely an agricultural area and titled land and supportive neighbors. So this is some of the economics that came out of the feasibility study. And so when we put this out in early last year, we ran the numbers at a $1,250 gold price, which to us was a barn burner sort of project. You can see it had an after-tax IRR of 34%. It paid itself back in just over 2 years. And as I mentioned before, would produce gold for less than $600 an ounce. You fast forward that to today's gold price. I mean, you can see the IRR is going to be jumping north of 70% with a payback of about a year. And so this is a good business, whether you're producing gold bars or tennis rackets or automobiles. I think, you love to have these sorts of margins around the business. Ultimately, I mean, we're somewhat insulated that even as the commodity price goes up and down, this is still a good project that obviously will get financed and get constructed. The other thing to point out here as well is that these sorts of deposits, low sulfidation epithermal systems, vein deposits and underground mine, very typical to start off with an initial sort of shorter mine life and see these assets grow as you get into them, really based on the fact that you need to do a fair bit of drilling. My past experience, as Matt mentioned, I spent 10 years with Oceana Gold, most of that in Australia. One of the assets we had acquired in New Zealand from Newmont, in fact, almost identical geology, originally was developed in 1988 with an 8-year mine life. And here we are now, more than 30 years on, and they've just actually driven for permits to see another 15-year sort of extension to that. So these sorts of systems tend to keep giving, but you get in, you get them going, you obviously pay back your investment quickly, and then you continue with that geology and you continue to step out. And so we fully believe we'll be able to do that here, and great opportunity for the people of Guatemala over the next 2 decades. This looks at the cash flows, which I think it's a key focus for management and a key focus for the Landin family as well. At the end of the day, you need to look for businesses and assets that are going to be profitable regardless of what the commodity price is. We can't control what the commodity price is. I lose no sleep about what the gold price is doing. And you can see at $1,800 gold, as I mentioned earlier, this will generate free cash flow in the neighborhood of $160 million per annum over the first 3 years. That's significant. That when you look at an EV for a company that is right around that same sort of value, and 2 years on, you'll be cash flowing those sorts of numbers. That's a great business. It's a great platform for us to grow from, but it's also potentially a platform that many current producers would love to get their hands on. So really the focus for us is to continue to de-risk that asset, move it through the engineering phase, get into construction, get it built, and either then generate those cash flows for shareholders, or potentially you're always going to be a takeover target when you're in the public market space. At that $1,800 gold, the free cash flow, and yet it's important to differentiate, because often companies will talk about operating cash flow, but it's not actually increasing the cash in the bank by a significant margin. If the free cash flows over that initial 8-year life of mine, which we think we're already growing based on the drilling we've done here over the last 15 months, is more than $1 billion. So for an EV of $160 million company, it's definitely a reason for us to stay focused. I talked about the success through the drill bit. This is important in our space, because once you get into production, every day you've got less ore in the ground than you had yesterday. And so having a prolific deposit like this that is proving itself to grow, proving itself to extend, is important. We added another 18% to the measured and indicated ounces in November. By our estimate, for every dollar we put into drilling expenditures, we're adding probably north of $20 in NPV to this asset as we look to update the mine plan, which will happen next year in concurrence with construction. The good thing here is when we're finding ounces, we're finding high grade ounces. So these things are, these are the 11, 12, 13, $1,400 margin ounces that we're finding here. And that obviously, continues to enhance the economics very quickly. This is just a long section of the deposit. So the focus last year was largely in the North Zone, where we had that success. We've actually made new vein discoveries. There's 5 or 6 new veins that were discovered over the last sort of 18 to 24 months through the infill drill program. And now we're focused in the South Zone, really trying to follow on with what we've done in the North Zone. You can see the design of the underground infrastructure. It's kind of in behind those colored areas. But the objective here is to be moving some of the inferred, the blue, into the red, and then also, of course, adding to the red through the drilling. And that's what we've been successful doing. And in fact, I think, let me just check on the next slide, but I think we've actually got some results that we put out here about a month ago. And so this is a good example here where you've got a number of veins kind of all in the same orientation you see on the left-hand side of the page. And as you kind of group those together, it's over 15 meters at 20 grams per ton. And that is a 25-meter step out. So when you look at the long section on the right-hand side, the colored blocks indicate a grade profile on the previous resource estimate. But we've drilled a hole out in what it looks like gray or white area, and that effectively means that there wasn't any resource that was there previously, and now we've intersected the same veins 25 meters on. So that's adding ounces, and importantly, I mean, it's adding ounces at 2 times the average grade, in fact, and with a cutoff grade of 3.5 grams, you can get a sense in terms of how profitable that rock will be as it moves its way into the mine plan. More broadly, referring back to the potential here, there's 1.5 million ounces currently sitting there. We're growing that. It's adding to it every day as the drills are turning right now. We have 5 drills turning. But Goldcorp did do some exploration work to the north and to the east. Keep in mind that this was all sort of 2009, 2010, 2011. And then come 2013, they put a stop on all of this. And so we haven't gone back and followed any of this up. So in many cases, there hasn't been any sort of follow-up here in, call it almost 10 years in many regards. But you can see that obviously there's gold out there, 57 grams over a meter. That good hit up to the north there, 13.5 meters to 7 grams. And so this is all very similar geology. It's the same geology effectively is what we see in our deposit, which is in that red hatched area. And you see the underground development that's been completed already. And so, for us, get this project into construction, heading towards operations, and then the geologist I know will be asking for a budget to try and take that localized model that's the deposit right now and start to use that to follow up on some of this additional smoke that Goldcorp had obviously tagged into previously. So this is, we've got, arguably 10 plus years already identified. That's going to grow just in that red hatched area. But here, this is where the next sort of 5, 10, 15 years of mine life is going to come from over the coming years as we start to stretch out along the trend. So more recently here in terms of focus, G Mining, which is a contractor we've brought in, one team approach. They were a contractor out of Montreal, but they just came off the successful Fruta del Norte project, which I mentioned earlier, that Jack was a part of. And so that was really the first commercial gold mine in Ecuador. And that's a company now that I think has a market cap north of $2 billion. And as I said, I mean, the stock has doubled or tripled over the last 2 to 3 years. So really we're taking that same model, utilizing the core team, the mine build team, and now they've been engaged at Cerro Blanco here over the last number of months. Similar shareholders, similar banking syndicate we're dealing with on the project finance, similar approach to the construction. And we believe, in fact, there'll end up similar outcomes when you think about how the market will respond to this sort of transition from developer into operations. undertaken a lot of trade-off studies over the last 3 to 4 months. We're getting close to finalizing the flow sheet. We're into the basic engineering. Some detailed engineering is also underway. And then we're starting to develop the vendor packages to go out for the construction phase. And so those go out to various different suppliers and manufacturers around the world. We'll start to get those back and then start placing orders to lock down long lead time items so they get into the fabrication process. And we'd expect that to start happening in the fourth quarter. The underground mine development, which of course needs to run in parallel with building the surface facilities. We're in the midst right now of a contract process for an underground mining contractor right now. We would expect to have that contract awarded towards the end of the year. And then they would be mobilizing probably later on in the first quarter as well. And so then they'll start the underground development to kind of pick up on the work that's already there. You know, if you came down and visited, you'd see what you saw there on that video where you could get down and touch the ore body. And then that'll run in parallel with the surface infrastructure through 2021 and then into 2022 as we get the middle part of the year into a process of commissioning the plant and starting to produce gold. So catalysts over the near term, I think obviously we're continuing to add to the resource. The drillings continue to demonstrate that this is a world-class high-grade deposit. The project financing package, which we're dealing with a syndicate of international commercial banks on. This is a process that's been ongoing now for more than 12 months and worked through all the due diligence sort of process, both on the environmental, social, community, and of course the technical. And so we're expecting to be taking that to credit approval here over the next few months. So that'll happen here this year. And that'll be a big tick as well, because then you kind of get the debt in place, demonstrate to the marketplace that you've got the debt package in place, and then you're really running at all cylinders ahead. Initiating early work activities at site towards the end of the year before Christmas. Our expectation is to get in, start doing some of the clearing and grubbing, get the plant site ready, and then you start to pour foundations and get some of those earlier parts of the construction process. And based on the drilling that we're doing, we'll likely be updating the resource again to follow on with what we did last year, early next year. And then of course, that'll lead into an updated mine plan later next year as well. This looks at some of the peer comps. I think it's one of the things that investors obviously look at. Where are the peers? There's really only a handful out there, I think, in the gold space where you can you kind of got a permitted project that's got great margins that's going to be moving into that sort of operations phase. The fact is that Mother Nature is not making any more of these deposits, and all the easy ones, of course, were permitted and mined 20, 30 years ago. And so there's really only a handful of companies that are out there that are going to see that exposure in the developer space. And arguably, this is probably the space when you look at the most torque or leverage that you see in terms of share price performance is when you move from that non-cash flowing or perhaps developer into that construction and operations phase, and how really the multiples can really change. So you can see Bluestone screens pretty well. I mean, it's got a good production rate, average life of mine. The free cash flow is amongst the best in the industry. But on a market cap perspective, I think we've still got some room to grow. You can see that some of the peers have actually moved up quite well. Pure Gold's a good example. I mean, that project there is about 12 months ahead of us. They're in construction now, so that's where we will start to get into here over the next 6 months. But that's a stock that I think is up 400% or 500% here over the last 12 months. And so that's pretty exciting sort of a movement that you see there in Pure Gold. And K92, of course, that's a producer, single asset producer, but we'll be generating similar type production and cash flow numbers to what Cerro Blanco will be doing in 2 years. And so you can see the opportunity for Bluestone to grow if providing we stay focused and continue to move here over the next 6 to 12 months into that next phase.
Hey, Darren, real quick.
Yeah, you bet.
Where is, can you expand on the Pure Gold comparison? Where is their project?
Sure. So Pure Gold's got an asset in Ontario. It's an underground mine.
Red Lake?
Yeah, that's correct. Yeah, exactly. So that's a project that was financed last year, and then they kicked off construction, there was it was similar to us actually. There was already some underground development that was in place there, and so they were leveraging that. It's a smaller producer. You can see kind of a sub 100,000 ounce producer.
Yeah.
The cost structure is going to be a little higher than what you see at Cerro Blanco, and thus your average life of mine free cash flows. And I should say that these numbers here are company numbers, so these would be numbers that Pure Gold's used, and in all 5 of these cases, this is using a $1,250 or $1,275 gold price. So you could effectively calibrate that with the higher gold price, but it gives you a reasonable comparison. But I think, the important thing here to kind of focus on, Matt, is when you kind of go from explorer to developer, then into construction, and then to operations, that's where you really see that sort of that big kick up, because effectively we go from a cash consumer to a cash generator.
Sure.
And it just so happens we're doing that now at a great time in the gold price.
Great. And one other question, and not to get you off course here, but can you just expand just a little bit as well on the geopolitical in Guatemala? And where I'm going with that is kind of more historically. Is there, looking at it, are there other mid-tier juniors or mid-tiers that have performed in Guatemala? And has there been any issues, geopolitically with that moving forward? And just kind of expand on that and give a flavor.
Sure. Yeah, I think probably, and I can, I'll talk about the political part of the geopolitical, because I think that's an important sort of differentiator. I've spent most of my career working in developing countries, a lot of it in Southeast Asia, other parts of Latin America. I've spent a lot of time in and out of El Salvador as well. And I think what I've seen when I compare it to those experiences that I've had is that the political part of the geopolitical argument is actually pretty darn strong in Guatemala. I think it's definitely better today than it would have been, say, 8 or 10 years ago. There was definitely a push in the past administration, I think, to try and root out some of the high-level corruption that historically had been a problem in Guatemala. And now with the new administration that's come in January, President Giammattei has been really clear with regards to his intentions and the focus on the economy. And as I mentioned, is getting very good support from the U.S. government and the U.S. Embassy as well. So I think from that political part, that's quite strong. Economically, Harvard, for example, put out a study last year. They believe that Guatemala will be one of the 10 fastest growing economies in the world over the next 10 years. Based on not only you got a young population, but you've got strong resources. And you're seeing a lot of companies that are also setting up shop there. I mean, our largest telecommunications company here in Canada has more than 4,000 workers right now in Guatemala, and is growing at leaps and bounds. You see the billboards when you're down there. So from an economic perspective, of course, when you've got strong economy, you've got stability. Still lots of work to do, because ultimately, I mean, the U.S. government has pledged, as I said, $1 billion of commitment of investment to continue to enhance those opportunities, because of course we see on television migration issues, and it's not just from Guatemala, but those Central American countries through Mexico into the United States. And so how do you deal with that? Well, you create opportunities, right? You continue to enhance the opportunities for people to have meaningful jobs, training, education, and then they can do that in their own country. And this, of course, is right in the midst of that. And we've had some discussions with a couple of the agencies in the U.S., along that line, that in fact this is going to employ 500 to 600 people over a longer period of time, and these are good, skilled jobs. Historically, the Marlin mine that I talked about before operated for 12 years. Very different part of Guatemala, though. Up in the highlands, where land is more communal, high percentages of indigenous populations as well. Definitely more complexities than you would see as you get down to Guatemala City, and then down towards the border area where we are. It's largely agricultural. It's titled land. It's land that's been in families for generations, and Latinos. There's a couple of large nickel operations in the northeast of the country, open pit operations. I mean, they've been operating going back to the 70s in some cases. The other asset that is more part of probably well known was the Escobal asset, and that's an asset that operated for about 7 years, but ran into trouble with some social issues, and that asset was suspended. It now is owned by Pan American. So Pan American Silver, one of the world's largest silver miners, acquired that last year, and they're working through really the necessity to build back that social license of sorts. We've got a good relationship with Pan American, and in fact are working with them on a number of initiatives in the country as well, around some of the legislation, for example, pertaining to underground mine workers. And right now there's a piece of legislation that inhibits women from working in the underground mine. And so we're working with them on that. But that project, I think, Pan American is working with the government. The government is actually undertaking a consultation process, which is really a broader sort of information sharing with some of the local stakeholders, particularly some of the indigenous groups. And the government's indicated that is a priority for them to get that completed. It has been somewhat delayed, I think, through the whole COVID-19 pandemic and the inability to necessarily have, obviously, larger groups engaged on that. But it's been pretty clear, even with regards to the court ruling there, that the court themselves said, look, let's get the consultation done and this mine restarts. So I think that's going to be an important aspect, I think, more generally. But we've had no impact where we are. I mean, for 15 plus years, there's been no conflict, no sort of major controversy that's caused major work stoppages at all at our mine site. And I can only speak to my past experience on places like Laos or the Philippines, or as I said, El Salvador. This is a much more straightforward sort of place to operate from the perspective that you have very strong support from the government. There's a mining act, there's rules, there's regulations. If you follow the rules, you don't have a problem. If you try to do shortcuts, then you're likely to run into problems. And to be honest, I mean, that's the way it should be. That's what we want.
And pardon my ignorance on this, but like with everything that you've just laid out, which is great, looking at it more specifically, in your experience, whether it was in Laos or what have you, El Salvador, or what have you, what's the impact, in terms of the country geopolitically, historically, on something like long lead time orders, that kind of thing? Is that an issue, or no? Is that just completely?
Yeah, it really comes down more to when you talk about the long lead time. So I'm talking about things like mills and filter presses, things that might take 12 to 15 months, for manufacturing, right? And so it's more of first you're looking at logistics, right? If you're trying to get things to the top of mountains or through jungles, etc. I mean, the Fruta del Norte project that I talked about in Ecuador, and Jack would talk to this if he was on the call. I mean, very different sort of scenario, right? You're in the middle of kind of almost a jungle. You got lots of saprolitic roads that you got to try and deal with to get into, mountaintops, all these sorts of things, right? So that's the first thing you're thinking about in terms of logistics once you get something to the port and try to get it in. Yeah. In our case, I mean, Puerto Quetzal's a 4-hour drive. It's on a highway, similar to what we would see here in parts of BC. So that's not so much a problem. Okay. In terms of the order lead times, it really comes down to what the fabrication shops are looking like. And we've seen a bit of a slowdown, obviously, here over the last 6 months across the board in virtually all industries. So I think from a lead time perspective, definitely very manageable, but you want to get your order in the queue. Yeah. And that way it's coming, to the port, and you can get to site when you're ready to kind of assemble it and put it on. So we don't see that as an issue. The other thing here as well, what we have going for us, Matt, is that it's a pretty small sort of process plant. I mean, we're processing 8, 10, 12 grams per ton. So the amount of ore that needs to go through is pretty small. Yeah. It means the componentry is small. And the flow sheet, the metallurgical sort of complexity is actually quite low. So there's no, particular niche type of process that we need to kind of insert into the flow sheet. And so that keeps it easier as well. So it's really from a deposit perspective, if this asset was in Canada or Nevada, like we would have been talking about it being mined and reclaimed probably 30 years ago, right? So this is the opportunity really for us.
Got it. Okay, thank you.
Yeah, you bet. Good questions. I think the next one, we're just going to talk a little bit about the geothermal. Stephen, I think the next slide. Yeah, you've got just a little bit, just to touch base on the geothermal and then maybe take questions. So this was, again, a bit of a unique opportunity for us. Goldcorp here, more than, I guess, about a decade ago, oil price was higher. Really, the sensitivity to the power price in Guatemala was quite high to oil and coal because they didn't have some of the new hydro that's come on over the last decade. So power prices were high, and the commercial grid was about 35 kilometers away. So Goldcorp did an interesting thing here. They had a geothermal lease to the east of the project, and they invested about $60 million on exploring and advancing this Mita geothermal project. They brought in experts from New Zealand, some of the best in the world when it comes to geothermal power. But fast forward to where we are, when we acquired the project in 2017, we also acquired the rights to this project. We did do a little bit of work on this in 2018. We ran some flow tests. You can see where we connected some of the wells. It demonstrated we had, kind of 5 to 10 megawatts of power potential here. But what's happened is we've seen more hydro come on, so power prices have come off. The grid actually is coming closer, so we're now about 8 kilometers away to string power lines. And so to keep the project, the gold project, as simple as possible, we're actually going to do that. We're going to string power lines, tie into the grid. Power prices today are, 6 cents, 7 cents a kilowatt hour. So some of the cheapest you'd actually see anywhere. A comparable mine in West Africa would be running diesel gen sets at 25 cents a kilowatt hour, possibly. But having said that, it's an interesting sort of additional project potentially for a partnership. We've had a number of overtures in. It is what we understand to be the most advanced geothermal project in the country. And the Guatemalan government has put out a 15-year energy plan last year where they are definitely continuing to focus on enhancing the percentage of power generation that does come from renewable energy. And so I think what we'll see here over the next couple of years is that you'll see some of the coal-fired power stations perhaps will kind of rotate off, and they will look for other ways such as geothermal to bring into the power mix. So an opportunity for us, potentially with a partner, but fairly unique for a gold mine. If we're having this discussion in 2 or 3 years, we could be contemplating, a percentage of our power actually being renewable and from green, which would be a great story as well. So that's an interesting asset from an infrastructure perspective as well. Maybe an opportunity now to take any questions.
So yeah, anyone with any questions for Darren, please fire away. I think this is a great story with an exceptional management team, going from the top on down to Darren as well. I've known Darren for loosely for the better part of 15 years, going back to Kimber, I believe, right?
That's right. Yeah, exactly. Yeah, my goodness, I was a few pounds lighter and less gray hair then, but that's correct.
You and me both. I was actually more than a few pounds. So, but I have another question for you with regards to the actual property. How long did Goldcorp have that property before it divested through it? And I know why they did. In 2013, we were all putting on more pounds and gaining more gray hair. But I just wanted to get some, perspective and background on the history with Goldcorp.
The asset. Yeah. So in the late 90s, the asset was actually discovered by a company called Mar West, and this is for those of you that are keen on gold discovery. Here's a little bit of a tidbit. So it was discovered in the late 90s, and it was actually by a fella and out of Vancouver, and they were looking for these type of systems, low sulfidation epithermal hot springs type systems throughout Central America. They had made a discovery in Honduras, and they were actually in a local restaurant in the Mita, where Stephen and I stay when we're down there in the late 90s, and they were at the restaurant, and they asked the waitress, whether or not she knew of any hot springs that were in the area. And she went and asked the principal, the owner of the restaurant, and he came out and said, yeah, there's one just down the road here, about 6-7 kilometers. So the next morning after breakfast, they rolled out there, found the hot springs, and the rest is history. They effectively staked the ground, got the permissions they needed to, did some initial geochemical work, and then drilled it out. And today we're talking about what's going to be a gold mine. So that process, that was in the late 90s. They were subsequently acquired.
I hope she got some equity.
I'm sorry?
I hope she got some equity.
Yeah, I'm not sure if the waitress did or not. I don't know in fact what restaurant that is, but it's an interesting Interesting story. So that company was actually acquired by Glamis, and Glamis, of course, built their business in Central America and Mexico, Honduras, as I mentioned, Guatemala, and then after that into Mexico, the Penasquito project, of course, they acquired from Western Silver. And then Goldcorp had acquired Glamis in 2007. So the bulk of the work was really, you know, from the late 90s through till 2013, and when the gold price came off, whether it's Newmont or Goldcorp or whoever, everybody was really pulling back on their capex items, and then 4.5 years later, we picked it up, dusted it off, got in there, and here we're now building a gold mine.
That's great. Now, I think we have another question from Mark.
Yes.
And I can read it to you, or
I see it here. Yeah, that's great. Thanks, Mark. So just for the group, I'll read it. Question about the country. But was the previous government administration, what was the previous government administration in the country, and how long are their tenures? You said that it's a favorable government currently, but how long will they empower, and what was the previous government? Okay, so good question. So the current administration was effectively took up the role in January of this year. They're 5-year terms, and so they'll be in for 5 years. The previous government, same thing, 5 years. It's a similar system to what you have in the United States, right? So they're fixed terms. However, the president can only sit on one term effectively. So there's not a multiple sort of term opportunity there. And I mean, historically, if you look, this is a right of center. This is probably the most conservative country, I'd say in many regards in all of Latin America. It is definitely right of center. You know, yes, historically, most Latin American countries, and actually I saw this in the Philippines as well, any place where the Spanish were, you know, in the 15, 16, 17, 1800s, you tend to have, you know, some conglomerate companies. You have families that often control quite a bit of the commerce in these countries. You see that in Guatemala as well. I've had the opportunity to meet with a number of the leaders of some of these conglomerates. And you find that it's a conservative, right of center, pro-business country. The links with the United States are very, very strong. And as I said, I mean, the U.S. ambassador, the U.S. embassy is very influential. There's strong ties back and forth from that perspective. The previous administration, actually, the other thing I should mention as well in Guatemala, there's a lot of political parties. So, you know, the Congress is actually made up of more than 20 different political parties. They have the traditional sort of, you know, right of center, left of center, and center. Most are kind of center right. And so, you know, traditionally, if you look back over the last 30 or 40 years, it's center right. The party names will change around a little bit, for example, but it is center right. I think if you look back a decade ago, you know, where some of the challenges were definitely on the corruption issues. There was quite a large scandal about 8 years ago, I think, where both the president and the vice president were tied up in it, and it was pertaining to the customs agency. And so I think that's been one of the knocks against not only Guatemala, but, you know, El Salvador, Honduras, you know, they've all had their challenges. But you've seen a shift here. I mean, even in El Salvador, where you had 8 years of quite left of center sort of rule, you know, President Bukele, who's come in here now in the last year, very, very different. Again, right of center, pro-business, strong links with the U.S., making some significant changes around security. And so you're seeing that dynamic, I think, that's changed in Central America. And then on top of that, as I said, I mean, economically, you know, you're seeing, you know, very well-known institutions like Harvard kind of step up and say, look, I mean, this country's on the move up. The IMF, if you look at any of the IMF reports that come out on a quarterly basis, Guatemala has one of the more conservative fiscal structures. Their government bond rate, for example, is about 30% less than what you'd find in Brazil or Mexico, for example, which, you know, for us in North America, we would look to Brazil and Mexico, of course, much larger economies, more established economies. That was a big surprise to me, you know, to see that the governments can actually borrow money 30% cheaper than what you can get in Mexico or Brazil. You know, the credit rating on Moody's and Fitch is actually on par with those sorts of countries as well. So I think from that perspective, you know, we're in the right place in the right time. You know, geologically, it's a great opportunity for us as well.
That's, that's great, Darren. We've got another question that is an audio direct from Leonard. Leonard, if you can hear me, you can fire away with your question.
Yes, I can hear you.
Okay.
Yeah, my name is Leonard Harris. I worked 22 years for Newmont and finished there in 1995 as president and general manager of Newmont, Yanacocha, Newmont, Peru, and vice president and general manager of Newmont, Latin America. I'm very familiar with your project because
Great.
I was director of Glamis when we acquired it. And I went to Guatemala with actually with a few of us from the board directors and some people from the IFC, as we were considering that we might bring them in as a partner. And I made arrangements to speak with the members of the community. There were 4 or 5 people headed by a young woman, a very bright woman. She was very much in favor of the project. But we got into a very big tussle with the church, the Catholic Church, including the Cardinal himself led a big group of people to mine site to protest about us cutting down their nice trees in Guatemala. And from what you're saying, you don't have any problem like that anymore. Is that correct?
Well, Len, thanks very much. It's a real pleasure to have someone with your experience in the mining space on the call. And yeah, hopefully one day we'll get a chance to sit down and share some stories. It sounds like you've got some great ones. Catholic Church and mining. Yeah, you know, it's a good question. I've encountered that in other jurisdictions. The Philippines is one of those, in fact. You know, it's interesting in Guatemala. If you look at the country itself, about 50% of the constituents in Guatemala are not Catholic. It's the only place in Latin America that's like that. You've seen quite a increasing sort of evangelical movement in the country, and in fact, the majority of the key political leaders and the business leaders, in fact, are evangelical. And down where we are in Mita, so you've been there, about 2/3 of the population is in fact evangelical as well. And of course, they tend to be the business owners, right? The people that are involved in the commerce. Now, having said that, the Catholic Church is a constituent for us. There's no doubt, and they are still very vocal. And I think in most jurisdictions, at least where I've been, the Catholic Church often can, depending on the local bishop or the priest, etc., can be against development, against mining, for example. We've continued to really build on what Goldcorp had done. We have very good engagement with the local communities and also many of the local community members that are involved with the church. And so we continue to kind of engage with them. We haven't had any sort of, you know, protests or strikes, for example, or bishops, you know, leading groups of people out to the mine site. I can tell you that the nuncio, who is the Pope's delegate in Guatemala City, was out at our mine site about 1.5 years ago in robes with a hard hat in the underground mine, visiting and seeing what we were doing, with regards to our local employees, you know, focusing on obviously on a variety of initiatives, from training, from human rights, etc. Our local sort of social programs as well that kind of come out of obviously are being a part of a good neighbor. You know, he was very supportive and continues to be very supportive. But I think that the right way to answer that, Len, is that you know, we recognize that there are elements within the Catholic Church. My wife is from Mexico, so she's Catholic. My kids go to a Catholic school. I do understand it. There are elements that perhaps sometimes are counter to advancing development, but the constituents in this local community, in the surrounding communities, are very supportive of this project. They refer to it as our project, and they are the vocal majority, I guess I should say.
A quick question, just a dovetail on that, Darren, and just curious. In Guatemala, are you aware if it's potentially mostly Jesuits down there, or do you know?
That I'm not sure. I know that in El Salvador there definitely is a component,
No,
a
I know
Jesuit.
that, but yeah, they tend to. I have a lot of experience with the Jesuits, and they tend to lean a little bit farther to the left,
Right.
dominantly. So that's why I was just curious. We
Yeah.
do have another question from Stephen.
Yes. Yeah, I see that here. So you mentioned relationship with Pan American Silver. Are you anywhere near the old Tahoe Resources property? What specifically are you doing with Pan American or your relation with Pan American? U.S. election, who do you think will win? Will there be any measurable effect on gold prices? Okay, wow. That last one's a big one.
Right there.
You know, Pan American, I mean, we're a small industry, right? And so since Pan American acquired Tahoe for $1 billion, we obviously have opened up a good dialogue there. In fact, one of our directors, Leo Hathaway, has worked with Ross Beatty and that group of companies for, I think, a decade and a half. He's a very well-known geologist, and when it was announced that Bluestone was going to acquire this project in 2017, Leo made the phone call and say, hey, I want to get involved. It's a great project, and you know, I want to become an investor as well. And so there's a good link there as well. But no, I mean, I think that the best thing probably to describe is that, you know, at the end of the day, we're both mining companies. We've both got assets in Guatemala. We've got a good line of communication at the Pan American side, but definitely at the local level as well. One of our senior managers and one of the senior managers over at Pan American know each other very well. We're sharing information. I know they were actually discussing some things yesterday on a variety of initiatives that we're working on. So good links there, but definitely two separate projects. We're about 2 hours by car away from Escobal. Escobal is in a very different sort of geographic location. If you ever get to Guatemala City, you'll see that it's very rugged. It's actually, the city itself is built on a number of hilltops, and you've got big sort of ravines that you often will, you know, drive up and through, and then you'll see a lot of the cities kind of up on higher plateaus. Escobal is similar. It's only about an hour, maybe even a little bit less outside of Guatemala City, and it is tucked up in the mountains, and you've got quite a close proximity to the mine footprint with the town. In fact, it's, you know, effectively the gate and the fence are like right there. So that's probably the best way I can describe that. Look, U.S. election. I can't call it. I can say though that, you know, whether it be the U.S., even here in Canada, you look to Europe, you know, there's a lot of money printing that's been going on, and you know, I share just a brief story with one of our investors who's in Switzerland. He has about $1 billion under management, and he's a Bluestone investor, but you know, he's, you know, only a small percentage really would be gold related equities. And he shared with me in November when I was there that one of his investors from the Czech Republic has about $4 million invested with him. He comes to visit twice a year to Switzerland to visit with Michael. And this investor, when he sat down for the 6-month sort of review, Michael explained to him that, you know, per his objectives, they were invested really predominantly only in the Swiss franc, safe currency. The Czech investor wanted safe, and the performance that 6-month period was negative 0.25%, effectively negative 25 basis points. And the Czech investor was absolutely ecstatic. He thought that was a great return because, of course, the overnight rate on the Swiss franc is closer to negative 80 basis points. And so Michael was able to make some investments in, you know, some money market sort of facilities to actually reduce the loss. You know, he looked at me and said, like, this is the world we're in today, right? You know, zero interest rate world, money printing, everybody wants a lower currency valuation. And here you have the Czech investor that has effectively lost 25 basis points in the last 6 months and went back to Prague very happy. So I think that tells us that, you know, things like gold do have a place in the portfolio. Nobody's really talking about it that much. I think in the scheme of things, you could put the market caps of all the gold companies in the world together, and it would be just a fraction of, you know, an Apple or an Amazon, for example. And you look at some of the producing gold companies right now, and you know, trading at, you know, 10 times PE, 10 times earnings. You know, this is an industry that's going to make quite a bit of money here over the next few years. And I think is going to come into the limelight at some point soon.
We have another question from Len. Len, fire away.
Questions. But first, I want to ask you, among other things, I am now still a member of the International Committee of SME. I was the chairman for 14 years, and I'd like to invite you to come to Denver next February and give us a little talk on your project. There's no need to write a paper, but it is very necessary to have a abstract. Does that interest you?
Well, I think it would interest me. By then we'll be in construction, Len, so I can probably show some pictures of some big trucks and some underground mining happening as well. So we'll put that on the radar screen, the SME in Denver in February.
Yeah, well, you know that the kind of papers are basically technical, but we like to cover things like community assistance and that kind of thing, and environmental matters and political matters, which you explained very well what's going on in Guatemala. You have a good project here. I just had a couple of questions. We had, when I was with Glamis, we had envisaged both an open pit and underground mine. Is that still the plan?
Yeah, good question. So no, the permit that we have is actually for an underground mine. And so it's a relatively small tonnage, 1,250 ton per day underground mine using both long hole open stoping and cut and fill sort of methods. But you know, to be honest, and this does come up, if the permitting was a little bit different, you know, if in fact Goldcorp had a permit that was an open pit mine, for example, we would be open pitting this.
Yeah.
But it's a relatively shallow deposit, so it comes very close to surface, and from an economics perspective, etc., it definitely would work. But going back to your earlier point, from a social perspective, from an environmental perspective, Goldcorp made the conscious decision to look at it from that underground aspect. This is going to be a footprint that is going to be a fraction of the size of most mines today. I think I know of a mine that's 4 hours from where I sit here today, and the entire footprint of this mine would only make up about 0.5 percentage point of just the tailings impoundment of a big copper mine here in BC. So that's an important aspect of this. But I think when we think about the geologic prospectivity, particularly as you go to the north, as we advance that, if we're successful there, and we fully believe we will, if there's open pit opportunities, the best way I think to tackle that is to then be having those discussions when you've got 3 or 4 or 5 years of mining underneath your belt, the success, the footprint, the community buy-in, the government buy-in, and say, hey, we can actually make this bigger, or we can extend it, and this is where it's going to go, and we're going to use a different mining method. So that's something to consider here, I think, in the coming years.
The in the mill is, I guess, it's just standard crushing and grinding and cyanidation. Is that right?
That's right. Yeah, exactly. Crush, grind, leach. Yeah, so nothing obscure here at all. This is about as easy as it comes.
Is the gravity included? No.
There, we actually did a bit of a trade-off on that. There is gravity in the feasibility study, but we're looking at that right now. We're not sure if we're going to need the gravity. We're not sure if it'll be necessary.
Yeah. Okay. What about tailings disposal?
Dry stack tails.
Pardon?
It'll be a dry stack tails facility, Lynn.
Oh, good. Because I've had experience with collapsing of dams in Peru. It was
this is a pretty small footprint. I mean, this whole thing, the footprint itself of the mill is only, I think, maybe 80 meters by 50 meters or something. I mean, you could fit this whole thing in a Walmart parking lot. So it's pretty small footprint.
That's good, because I gave a paper just with a professor from Peru last year at SME, in which we pushed forward the idea of filtering,
Right.
Because these dams, it's very serious business.
Yeah, no, it is. It definitely, I think that is a trend in terms of where things are going, for sure.
Thank you very much, Len, for those questions. Darren, one last one, and we'll wrap it up because I know we're going over time here. But I noticed on the bottom of this slide here that you've got a list of these companies here that I guess partners, investors, whatever it might be. Is BD involved with this project, or is no? Is it just?
Yeah, so no, Ross isn't a shareholder here. I mean, Leo obviously is on the board and works quite closely with Ross, but yeah, no, our larger shareholder obviously is the lending group, and then a number of institutions outside of that. I see Mark Andrews has got a couple of questions here. Maybe we can just address real quickly.
Yeah. I didn't see that.
Let's see, labor situation in the area. Good labor supply to draw from on the mining operations, or will you have to import? So yeah, good question on that. I think, you know, as we move into the construction, we will be bringing in some key technical experts that will come from outside of Guatemala on the construction side. But we're envisioning that, you know, the bulk of, you know, the construction process will actually be probably, you know, locally based contractors, or at least Latin American based contractors. More recently here, there was quite a large aggregate plant that was built, this $500 million aggregate plant in Guatemala. And so, you know, based on that and some of the other mines that have been built over the last, you know, decade or so, that there's quite good construction expertise there. When we think local, as far as in and around Ascension Mita and the Jutiapa department, we're actually developing a training strategy around that. Right now, we have about 80 or 90 workers, and they all predominantly come from the local area. You know, driller helpers, drillers, our environmental team, community team, even our underground mining team, you know, predominantly is coming from Cerro Blanco. Because remember, a number of years ago, in terms of when the underground development started at Cerro Blanco, Gold Corp actually started that there. They used a contractor, they trained up the local workforce, and then actually took a lot of those guys and moved them over to the Marlin mine, which is about 11 hours away, where they continue to work in the underground environment in an actual producing mine. So we're going to be able to leverage that. There is a fair bit of good content in terms of Guatemalan technical skills. In fact, there's 10 or 12 Guatemalan miners that are working at Fruta del Norte in Ecuador that I mentioned at the Lending Gold project that we're aware of. So it's going to be a bit of a mix. So we'll definitely, for the construction, we'll have some of the, you know, the senior managers and supervisors in some of those key technical areas will probably come from outside of the country. But our vision here is that this is going to be a mine that's going to be largely Guatemalan as we get into an operations phase. Absolutely. And, you know, that's an important part, and it's a huge opportunity. I mean, it's one of the things that former boss of mine used to say, our job really is to take resource capital, which is the stuff that's in the ground, and turn it into human capital. And that's what we're doing right now. We're putting a lot of effort around that. The other question here I see is around Nacera and Gacera. So to the U.S. election, are you familiar with Nacera and Gacera? Have you thought about how you affect your business moving forward? I'm not familiar with that, I don't think. Nesara or Gesara. So I can't comment on that.
Okay. Well, if there are no other questions, I know we went just a little bit over time here, but hey, Darren, great job today and great story. We really, you know, at 49 North are very happy to be able to present this story. I think it's a really good group, as I mentioned, and then a better project. And very, very happy to have you today and field all the questions and go from there. So without further ado, thank you again, Darren, Stephen Williams, and Bluestone Resources, and thanks to all the attendees today who were able to hear the story, and let us know if you have any questions moving forward, and Stephen Williams and myself can help facilitate, and we'll go from there. So without further ado, everyone have a great afternoon.
Very good. Thanks very much, everyone.
Okay. Thanks, Darren.